Sachin is has helped Staggered actually doing our taxes and a lot of other things. SKP accounting. Sachin has over 500 customers, with half of them almost 250 business customers. He helps businesses kind of get their act right and keep the books clean, and also advises on the best accounting practices and to ensure the maximum benefits from all the convoluted tax codes and ordinances and things like that. So without the delay, I'm going to present these slides that Sachin has prepared for us to be aware of in terms of what was changed or what's different, what's coming up. So Sachin, let me see if I can pull up, but
Okay.
take it over.
Yep. Thank you. Can you guys hear me? Can you guys hear me?
We can hear you, and we can see side of your face as well.
Okay.
Okay.
'Cause I have like so many monitors, so I'm trying to track like where I'm. Okay, maybe this one. So
Okay.
hi. Yep.
You see the screen though, right? That I
Yep, I
shared?
can. Yep.
Okay. Let me know when to turn.
Yep, so we're good. So hi, I'm Sachin Parajuli. I'm CPA by profession, and I've been in this field for now 16 years. So I've done different. I'm more specialized in tax. So I've been doing tax for the business, individuals, non-profit, international tax, everything. So my main focus is international tax, but I do a lot of these it's small business clients tax return. So basically, I do the tax planning for the small business taxpayers, like how they can get benefit on their individual tax returns. But that's my primary focus for the last few years. Today, since like I have like 8 minutes, I wanted to talk about the key tax changes in 2024, and then what we are expecting in 2025, and also what things we are expecting under Trump administration. So we can go to the next slide. So basically, if we compare between 2023 and 2024, we don't have any significant changes. It's just like $30 amount have changed. For example, standard deduction. So for 2023, it was 27,900. It went up to 29,200, like 1,300 increase. So that's a very small increase. Same thing for tax brackets. I think it's just they adjusted for inflation, not a big change. Most important thing is I have seen that issue with a lot of these, our Nepali community in 1099K. So prior to 2024, we had a limitation, like there was a threshold of 20,000 or 200 transactions. But now they changed for 2024. They have changed the 1099K reporting requirement to $5,000, and that includes any transaction. So if you have one transactions, then you are liable for that 1099K. That means IRS is also getting one copy, and you are required to report that on your tax returns. Example, a lot of like we like to do send payments through Jelly, Venmo, and everything, right? So now you have to be careful. If your total amount reaches 5,000, then you are subject to pay tax on that income. And for 2025, it's going down to 2,500. And eventually they're trying to make it to $600. So you have to be very careful while you do the Jelly transactions or anything like Venmo, Jelly, and then you have to be careful. Mostly like if you have rental property, right? If you try to ask from the Jelly or everything, then you have to report. Even though you get 1099 miscellaneous, you also need to include this 1099K. So look for the 1099K that you might be getting. A lot of people, they don't realize that they are getting that one, but one copy goes to IRS, and a lot of people get into that trap. So the other changes is basically the third one is Social Security tax. So every year that limit goes up. So last year it was 160,000. So how does that work? Your payroll tax, right? On your W-2, you have your payroll tax. That's like Social Security and Medicare. Social Security is 6.2%. Medicare is 1.45. So that total is 7.65. So your 6.2% is limited up to 100. Used to limit up to 160 in 2023. Now it's going up to 168K. That means like if you make 180K, you are subject to 6.2% tax on Social Security up to 160K. After that, there is no tax for that one. But that amount goes up every year. So by like almost around like $8,000 to $10,000. The second one is the bonus depreciation reduction. That will be applicable only for the business. So usually a lot of taxpayers, they ask questions like, can I buy a car for my business and then take a full depreciation for the first year? So you can directly write off through two processes. One is Section 179 and through bonus depreciation. So Section 179 also has a limitation for the estate. There is estate aid back. Then another one is bonus depreciation. So prior to 2023, you can get like 100% reduction, but now it's gradually going down. So in 2023, you had 80%, 24, you have a 60%, 25, you have 40%, and it goes eventually by 27, it goes to zero. And the other one is gift tax exclusion. I don't know if this will apply to us because when we look at the lifetime exclusion amount, that's 13.61. But I don't see like it doesn't apply to us. It might apply to some of us. So if you are trying to give gifts to your children, make sure that annual exclusion is 18,000. If you give more than that, you are required to file gift tax returns. But you might not, you don't need to pay tax, but you are required to file the gift tax returns for that one. If your gift is more than 18,000 per donee. So that's one thing. And then other interesting thing is 529 plan. I don't know how many of you guys have 529 plan for your kids. So before 2024, if you don't use that funds, if it is not used for the education, then that's a taxable. But now, if you have unused funds for 529 plan, you can roll over to Roth IRA. But there are limitations like what you need to do. I think it has to be for 15 years, and then the maximum you can do is 35,000, and there are like few other requirements. But good thing is that in the future, if you have unused 529 plan for your kids, you can roll over to Roth IRA. If you meet certain requirements, then that can be done. So other change for 2024 is you can go back. I think there are 2 points. Home improvement energy credit. Now you can get up to 3,200 home improvement energy credit. Like if you have, it applies more in like cold areas, right? Like Minnesota or like where you want to do the energy saving things, then you can get credit up to 3,200. Right? And then the last most important for a lot of these people who maintain the cryptocurrencies, IRS is going after them now because they are also, I think, from 2024, or I need to look at if it is from 2024 or 2025. Now the broker is supposed to issue 1099-DA, that is digital assets. It's like 1099 dividends, 1099 is when you have all these stock sales, then you get that capital gain statement. It's similar to that one. So for crypto, brokers are required to issue 1099-DA to the taxpayers, so they have to report on their tax return. So they are going after all these cryptocurrencies, foreign assets, and everything. We can go to next page. So I guess since now it's already 9, we can go, right? Because there's no, it doesn't get stopped, right?
Yeah, I think you can continue for now.
Okay. So now just going back to the so 20,
apologies for folks who if we can continue for next maybe 5 minutes, I think Sachin will wrap up.
Yeah, and then I can go faster, but if you have any questions, you can feel free to call me or email me, text me, and then I can answer for your questions too. We can do that one. So So since like 2024 and 2023, we didn't have that much change, but we are expecting a lot of changes in 2025 and beyond 2025. So basically, for if I need to highlight for 2025, it's quite consistent to 2024. It's just like a dollar amount. But with the Trump administration, we can go to next page because there's very small changes between this is 20. Okay, go next. Okay. So TCJ expiration. Do you guys know anything about TCJ? Anybody?
No.
Okay, basically, if you think about pre-2018, you used to have these personal exemption. You used to have standard deductions of 12,000, and then your tax rate, the highest was 39%. So then in 2018, January 1st, 2018, they changed this. So they did a lot of this tax cut. That's called like TCJ. So individual income tax cut. So they changed from 39% to 37%, and also the bracket, they just changed that bracket, lowered the bracket, right? And then child tax credit was 1,000, now it's 2,000. And then they doubled the standard deductions. They removed all these what we call that estate tax and property tax limitation to 10,000. They changed to that limitation, right? Now, after 2025, they are expiring. That means it's going back to 39%, going back to 1,000, right? So, but because of the Trump administration, they are trying to extend that, make it permanent deductions. Rather than expiring in 2026, they are making it permanent. So we hope that it gets permanent. So even that bonus depreciation, right? So it's getting phased out to like 40%, 20%, 0%. They wanted to make it 100% so that you can fully write up in the first year. So we hope that they can extend this one. So we can go to next. Okay. So under the Trump administration tax plan, I heard like you guys might have seen this one from like Google and everything, right? So he's trying to exempt tips from income tax. I think that would be good for all these paycheck to paycheck workers. And then also exempting Social Security benefits from income tax. So usually when you are like after 65, you start getting this Social Security benefit check. So they are trying to exempt that from the income tax. And the other thing is creating itemized deductions for the auto loan interest expense. So if you have a auto loan, you might be able to take a deductions under your itemized deduction, like your mortgage interest. But it's only for the cars made in US, which makes sense. And then the child tax credit might go up to 5,000. So right now it's 2,000. So you might get, if things goes well, then it's like $5,000 per child. And like I discussed before, making TCA permanent, so which is going to expire at the end of the 2025. In terms of the business, they're trying to change. So right now the corporate rate is 21%. They're trying to change this to 15%. If you have when we say corporate, it's like a C corp. So you have like business, like LLC, S corp, C corp. LLC and S corp are passed through. That means like you don't pay tax on the business, you pay tax on the individuals. The income flows to your individuals. And then with all your W2 income and everything, whatever is the rate, then you pay tax. But the C corp, you pay tax separately on the business. But if you take it out money, then you pay tax at the individual level. So there's a double taxation. But your corporate rate is 15%. And whatever you take it out is your dividends. So if it is a qualified dividends, then it's like either 0%, 5%, 15%, or 20%, depending upon your income, right? So a lot of people might think if they are like a 39% bracket, they might open their company as a corporate, pay 15% tax, and then max amount for the qualified dividend is 20%. So 20 plus 15 is 35%. They might end up paying 35% compared to 39%. So they might be changing their business structure to meet that requirement. And last thing is imposing. So they need to get something out of these lower tax, right? So in order to get that money back, they're trying to put that 20% tariff on all imported goods to US. So I don't know how it is possible because they need to do all those reconciliations of budget and everything. So we'll see, like maybe tomorrow we might have some retroactive tax benefits that might apply to 2024, or throughout these tax seasons, they might change a lot of things. And then we might, if you have filed tax returns earlier, you might need to amend and then get those credits or something. So it's a lot of things will change in next few months.
Okay.
Yep. So next, if there's anything. Yeah. So I just wanted to put a few things here that you need to focus, like 1099K reporting threshold, right? Be careful on that one now when you try to send money through Gel or Venmo and everything. Try to limit that one, because for 2025 it's 2,500. And also, if you guys have HSA plan, or if you qualify for the Texas IRA, make sure that you can max up to like the maximum amount before April 15. You can still contribute and take a deduction for your 2024. And also you can check for the Roth IRA qualification. If you meet that threshold, you can contribute to Roth IRA for 2024 in 2025 before April 15. And if your income is high enough that you cannot contribute to Roth IRA, you can also think about backdoor Roth IRA. So that's like you contribute to your non-deductible IRA and convert to Roth IRA. So a lot of people nowadays, like a lot of people are doing that one because they wanted to put more money to Roth IRA, and if they are not eligible, they go through the backdoor. Yeah, that's all. Any questions now? Since like I have very few minutes, so I'm just trying to rush, but
No, thank you, Sachin. I know we rushed you, and I think this could be a whole session of 1 hour or even more. And we hope that we can bring you back again sometimes before the tax season ends. But like Sachin says, if there's any immediate questions, please type it here or ask, unmute yourself and ask. And, Sachin, thank you so much. I mean, that's a lot to digest, but what I feel really encouraged about some of the changes in the tax, particularly the 521 was helpful for me.
yeah.
And also some of the conversions that you mentioned, HSA, things that are expiring. All those are very helpful tips. Thank you. And the most important thing for me is I'm glad you're taking care of all of this for us.
Yes, we are definitely lucky to have him. Sachin, you've always been very helpful, responsive, a little late responsive, let's just say. But
yeah, because you asked too many questions.
I'm just joking. But I dropped your email address in the chat for everyone to contact him. If you need any tax help, if you need business tax help, he can help you with that as well, or just a consultation for you to make right decision for to save on taxes, or if you are opening up a new business. I see someone here who's opening her own dental clinic here next to our hometown. So, if you need to understand what's deductible and not, I think Sachin, that will be the way to go.
Absolutely.
Very much for joining.
Yeah. And so we're so glad, Sachin, you joined today. And thank you, Balda, also for joining us today. And it has been such a, helpful event. But thank you to all who took our more than an hour of Sunday evening, morning for some of you, and Monday morning, and participated and joined today. And we sincerely thank you. We would like to be engaged. Please write us. What did you like? What did you not like? What would you like to hear in the next webinar when we have one? Who would you like us to bring? What are some of your challenges? How have you navigated the complex investments and land space? So write us, and we'll be happy to connect and engage. And then until next time, I think thank you and good night.
Thank you very much.